Good afternoon, Maverick traders. It's Joe with you here. It's the 16th of May. It's a Tuesday, moving into, already the mid part of May. Where do the markets fare? Exactly what you thought they would. We have been sideways for quite a few days. Now, if you take a look at how we finished, the Dow, the S&P, and the NASDAQ, kind of different. 1% on the Dow, just over 0.5% on the SPY, and really light, or I'd just say flat on the NASDAQ. I've seen this for quite a while when it comes to some of the earnings results and some of the action I've seen in some of the sectors when it comes to people buying versus selling. I'm going to leave it there for a minute because let's take a look at the Russell, down 1.46%, probably by far the most volatile of all when it comes to day to day to day. Oil and gold down, both gold down about 1.45%. A lot of it has to do with what the Fed's action will be based on what we've seen over the last little bit. But I'm going to go ahead and just subside that. I'm going to take the Fed out and realize, look, we're stuck with what earnings are going to be and what companies can project and what they're going to make moving forward. We know that the Fed should slow or might slow. If whatever action they make, the markets will react to. Daily news-wise, folks, I think the big thing is going to be the debt ceiling deal. It's now the focus of the market sentiment. They seem to come out okay, but it will inhibit or create a little bit of a hiccup in the markets in the shorter term. The only thing we can do is take what we can with earnings season, projections, and more importantly, sentiment. Whether or not a company says it's bad, it's going to be slow moving forward. If people believe in the company, you're going to see the price actually move higher. That's what I want you to follow. So outperformance I have seen within the stronger sectors and bigger names. Amazon, Apple, Microsoft, these things are all moving higher. So let's follow price action. Advanced decline line. Obviously, 76% decliners, 20% advancers, so on and so forth. It's a bad day. It's just a bear day. No big deal. But I can't really chalk anything up to it past that. Above and below the 15 moving average is 60-40. That can absolutely change in the matter of 2 or 3 days. We are really at an area where a lot of these companies, a lot of these stocks in all sectors and indexes are just kind of hovering just a little below or a little above. Let's take a look at the charts here. We have a pretty good consolidation pattern going on when it comes to the SPY. Now, I can take a look at it this way. I'm going to go ahead and draw a line across here above about the 415, 416 level. I'm going to draw a line off of this pivot point here in March and move it higher. Okay, well, I've got myself an ascending triangle pattern. Let's go for it. Once it gets above this 415, 416, 17 level, let's go buy, buy, buy. However, I've got traders that I work with that see something a little bit different. Well, in the short term, we have this symmetrical triangle pattern with a decreasing volume. So, if anybody believes in if you put forth your chart pattern expectations as symmetrical triangle above moving averages, you expect it to move higher with the next pop to the upside. However, if this fails and we break a 405 support versus the 50-day moving average, it can fall to the downside. Many, many different things this can do based on expectations of price action. What do we have? Price action. So let's follow it. I'm going to lean a little bit more towards consolidation side. I'm going to agree with both sides and realize that, hey, if we break above this, it's going to be substantially higher. However, if we see the symmetrical triangle pattern fail, and we break below a 405 support level or the 50-day moving average, I see something bearish. Now, long story short, folks, I'm not going to be bullish until this point, and I'm not going to be bearish until this point. So what do I do between now and then? Sideways. For all my traders out there that have been trading sideways over the last month, you're doing great. There's a reason for that. Let's go to the Qs. This one is a little bit more glass half full. I think it's kind of a high base pattern or ascending triangle pattern, whatever you guys want to call it here, that is leaking higher. So I don't want to go ahead and buy something that's super outrageous or super bullish. However, I am not going to short this. I'm going to be glass half full. I do a lot of butterflies. I love to do targeted butterflies. My targeted butterflies in this situation, this industry, are going to be upward. They're going to be above current stock price. That's just kind of how I play it. It's going to give me my better advantage. It's going to give me the risk reward I want, and it's going to play to the strength of the overall sector, or in this case, the index that I'm playing it. How do we finish? Well, there you go. Let's have a little bit more. Here's a little bit more that actually supports what I'm talking about. Look at energy. Let's look at. I'll put my cursor over here. Energy, real estate, industrials, all red, red, red. Consumer cyclical, communication, technology. Yeah, there's red in here. A lot of red, but a lot of green as well. Strength is where you find it. So where am I at? I'll tell you, pretty easy. Flat for the week because of this consolidation area. I have a little bit of a slope that I do not like. I don't like today's price action below the 20-day moving average, but I do like the 50, and the slope of the two are kind of glass half full. I am looking at the overall ascending triangle pattern when it comes to my monthly outlook, and that's, I'll draw it here so you guys can see it on the small chart. I'm focused a little bit more here than I am here. That's just how I break this down. All right. Let's get to some trades. We got some bull trades here. CRM, NVIDIA, WWE. These are all super strong. Meta, it's got a consolidation potential, but it's going to be wide. What was really interesting is me touting how bullish I am basically on some of these charts. There's a lot of bears out there. Take a look at that list. Please go through them by yourselves individually. This is CRM. It's got a nice ascending triangle pattern. As you can see, it is above the resistance of 200. This is something I would play more closer to the cuff, meaning just above 200. I would play it below 210, but above 200. This is where you can do calendar spreads, horizontal spreads is what they're also referred to, diagonal spreads, diagonal spreads, slight bias to the upside, butterfly spreads, or even condor spreads. I'd be completely fine with that. And folks, I'm talking a lot to my bears out there as well. NVIDIA has been on our bull watch list for a while. We've called it this outperforming darling. It's been basically the hot topic, if you will, for a while. But it's also, based on this candle, in this area of, I don't think it's going to get above 300, but I'm pretty comfortable that it's going to stay above 280. Yes, folks, that's a $20 range I just talked about. So make sure that you price that for what it is. Sideways up, targeted butterfly spreads, condor spreads, or out of the money horizontal spreads. WWE is one that we talked about a lot, especially on my Wednesday class. And the 105 just seems to hold in there pretty strong. We actually talked about this on the bull side right around here as a breakout above the 110. It did not make it. It actually pulled back. We talked about a diagonal. Now, over the last few days, that diagonal spread should be decent as long as your back leg is through June, right? If it expired last week, well, that sucks. But if it expires in the end or midweek part of June, you're looking pretty good. I would still play this right around the 110 level. It looks like it might surge and break up, but most of the time, folks, these do pull back. So something sideways in this stock. Here's Meta. This is my first consolidation trade, and it's difficult to do. I'm trying to price this out personally because it is so volatile. I'm going to draw a line here and here. Now, folks, this is 225 to maybe 240. That's right. This is maybe 240 right here. And this is 225. Yeah, it's a massive range, and you really don't see it until you really get there to buy the options. But that's kind of the range I'm looking at. Whatever you can do to make sure that you don't have too much of a risk reward. Sideways works, but you gotta give it a wide berth. Please do not play this thing out inside of $10. It's gonna give you a heart attack. Let's go to W, Wayfair. I like this one. It did fall down a little bit, but it is consolidating. It has a very strong support level here at about 35. It did move higher and then came back down to this 35 level. You could open this up to like a 30, 35, 40 butterfly spread in the shorter term. That's what I'm kicking around. I haven't priced it yet personally, but that's what I'm looking for. But I don't think I'm going to go too far than maybe a week and a half on this if I'm allowed. Let's move on to the bears. This is Moderna. Moderna's got a beautiful descending pattern, and it has been for quite some time. Take a look at this. A little bit of a reluctancy for a crossover. Finally got the crossover here. And look at this widen as it falls. Folks, we need to pay attention to this. It came back. It tried to kiss. It almost crossed. And it looks like it's falling again. So if you guys are moving average people, this is a really good kind of support or an area that will just show you that this thing is falling harder than it retraces. If you're not, well, then let's go into price action. That's a support level. That's a really bad whatever it is. Falls down, hits this, comes back, retraces to the support level as resistance, and it's rolling over nicely. I do love today's candlestick action. If you guys want to extend this to the downside with some sort of Fibonacci, that's great. Or just play it below 130. I could take that as well. All right, folks, let's take a look at PM. PM is in a very similar situation. Philip Morris, it is in the consumer defensive, which I thought for sure would hold in there, but it's not. I'm seeing industrials and materials fall wayward. All of them are kind of slipping here. A little bit of a slip. Look at this crossover. They're pinching again. So this move is kind of erased as it breaks this 93 support. Now, I kept this chart wide because I wanted you guys to see back over here because there's a pretty good area to where that could be a target. You could see that it gapped and actually retraced back there, but a shorter term target of 92 makes sense. But below that 94 also makes sense. Sideways to down on PM. Easy peasy, right, folks? And the last one I got for you today is Deere. On the bear side, this is in the same situation. Industrials, we've talked about this a lot, but this one has a nice descending pattern. I know that's green, folks. It should be a little bit more red. Here we go. There, a little bit more bearish. But I love this channel it's in. And for you guys that are Bollinger Bands, you can see that the channel isn't to the bottom until it gets to about that 345 level or 350 level. So it's rolling over pretty aggressively right now. The volume looks pretty decent here. I kept this wide on purpose because I see back here at the end of September into October that 340 could be revisited. That's a big difference. So a diagonal spread makes total sense here for you guys that want to play it. All right, there's my 2 cents on some of those trades. The debt ceiling, the debt concerns, it's going to be the focus of the market, and it will be for quite some time. This is all political. Whether you are one side or the other, it doesn't matter. The markets are going to behave accordingly. Earnings results and projections should continue to be in the driver's seat. Be mindful of what comes out, what misses, what they do after they miss, or if they beat, or if they project higher. This is going to be a huge advantage with these consolidating, tumultuous, churning, volatile markets. There are some bull trades out there. The ones that I showed you, Nvidia, a lot of these things, Microsoft, things that they just refuse to go down. Keep that in mind. There's also ones that can't go up. So let's play where weakness is and let's play where strength is. Signs of slowing and contraction in the economics. We're seeing that the Fed, whatever they did, is starting to work. Now we got to worry about, oh geez, are we headed for a soft landing? Did they adjust too far? I'm already seeing rumors of the Fed decreasing or lowering rates by as early as the end of the summer. So we'll see where that goes and how the market deals with it. So we have tons of earnings. Home Depot, Baidu. This week we got Costco, Target, Take-Two, Walmart, Alibaba, AMAT, Ross. We got a ton. So make sure that you guys know that we are in the midst of all of these and check your earnings accordingly. All right, guys, thank you so much for joining me. We'll talk to you next time. Bye, everybody.